I'm Steve Hovde, Chairman and CEO of the Hovde Group. I predict we're likely to continue to see between 275 and 300 bank M&A deals in 2015 and 2016, mostly among the smaller community banks, those with less than $1 billion in assets. I think several factors have been and will continue to tempt smaller banks to explore sales. First, net interest margin compression, compliance costs, cybersecurity threats, and more burdensome regulations have taken the fun out of the business for a lot of management teams. Second, management and board age continues to be a primary motivator for sales. Simply put, we're all 8 years older since the last peak. Banks without a solid management bench in place will likely look to exit while they can. Third, the improvement in buyer stock prices has enabled acquisitive banks to utilize a strong currency in deal consideration, which in turn has lifted M&A pricing. That said, the smallest bank targets, those with less than $250 million of assets, have seen very little price improvement over the past several years as compared to the larger banks. And many of the smallest bank targets will end up being cash-only deals. On the flip side, many acquirers are busy absorbing deals or awaiting approval. And some CEOs have expressed the opinion that M&A pricing has run too far. So the buyer pool we had a year or two ago may be smaller and act as a headwind for deal activity and pricing. But I still think there are too many challenges for smaller banks and deals will still be struck. I believe a lot of factors related to deal activity and pricing will contribute to an increasing number of merger of equals or MOEs. Personally, I'm very pro MOE. We've talked with many smaller bank boards and management that are not satisfied with deal pricing for banks their size. Yet they're struggling to produce enough shareholder value from organic growth alone. These boards and management have started looking at potential opportunities to partner up with another bank of a similar size in an effort to approach or surpass the magic $1 billion asset mark. By partnering with a like-sized bank, the boards are hoping to achieve a double dip for their shareholders in which they can generate higher earnings through cost saves and then turn around and sell the larger pro forma company for a higher multiple than either of the original banks could have ever achieved on their own. Again, I think this is a trend that will significantly pick up among small banks.